Okay, let's unpack this. When you think of global medical hubs, maybe Singapore comes to mind, or Germany. Well, today we're doing a deep dive into a leader you might not expect, Thailand.
Yeah, it's kind of surprising to some people.
Right, but they consistently rank really high, like number 4 globally for JCI certified facilities, number 6 for best medical systems by CEO World Magazine, number 8 for healthcare system by Numbeo. And listen to this. One of their private hospitals is actually in the top 5 globally for medical tourism.
It's impressive.
So our mission today is to explore how this whole booming sector works. We'll look through the lens of the biggest private player, Bangkok Dusit Medical Services, that's BDMS, and also a key premium competitor, Bumrungrad Hospital, or BH. We want to see how these two giants, navigate this complex and super competitive market.
And what's really fascinating, I think, is how deliberate government policy has been here. Since way back in 2003, they've been actively promoting Thailand as a global medical hub. So we'll be looking at how that sort of strategic vision played out for BDMS and BH. We've got some pretty detailed financial and operational data to draw on. It really tells the story.
Okay, so Thailand's pulling in over 2 million medical tourists a year. That's huge.
Yeah.
From your perspective, what are the absolute key things driving that? Is it just about being cheaper? Or is there more to it?
Oh, it's definitely deeper than just the price tag, although yeah, that's part of it. You've got genuinely high-quality medical care that holds its own globally, plus really good treatment efficiency, a well-established infrastructure for medicine, and then there are the professionals, highly skilled doctors and nurses.
And the hospitality, right? People always talk about Thai hospitality.
Exactly. That's a huge differentiator. You can't underestimate it. And yes, combined with significantly competitive pricing compared to, say, Western countries or even others in Asia offering similar standards, it's quite a powerful combination. Makes it, an ideal destination for many.
And it's not just one niche service drawing people in, is it? Seems like they cover a lot.
No, it's incredibly diverse. People come for aesthetics, gender affirmation surgeries, osteopathy, complex things like cardiovascular care, fertility treatments, even, high-quality dentistry.
Wow.
Yeah, the range is quite something. And backing this up is that government long-term vision we mentioned. They've actually designated the medical industry as a new targeted S-curve industry.
S-curve. What does that mean in practice?
It basically means it's a priority sector flagged for accelerated growth and lots of government support. Think incentives, tax reductions for investing in R&D, making new medicines, medical tech. It's all aimed at boosting that international competitiveness. The Global Wellness Institute, they're projecting something like 13% annual growth for medical tourism in Asia.
13%, okay.
Yeah. And we're also seeing this interesting shift towards preventive care and wellness. It's not just about fixing problems anymore. The big private hospitals are really proactively marketing these comprehensive health and wellness centers. You see things like the BDMS Wellness Clinic or Bumrungrad's Vital Life Scientific Wellness Center.
That makes sense, tapping into that whole wellness trend. So you have the government push, the private hospitals adapting. What does the overall private hospital landscape look like? How many are there?
Right now, the data shows about 370 private hospitals across Thailand, and they have roughly 36,000 beds in total. But here's the interesting bit. About 90% of them, they're concentrated in Bangkok and the central region.
90%. Really? Yeah.
Which tells you a lot about who they're serving. It's mainly patients with medium to high purchasing power. That concentration really highlights where the focus and, let's be honest, the profitability is.
Okay, so that sets the stage. Now, let's really zoom in on the giant in this picture. Bangkok Dusit Medical Services, BDMS. I mean, they sound massive. 58 hospitals across the country as of April this year. 7,222 inpatient beds. That's, nearly a fifth of all the private beds?
It is about 18% of the total private capacity. And that kind of scale isn't just numbers on a page. It's a real strategic advantage. A moat, you could say.
How so?
Well, think about it. Over 13,000 doctors, 10,000 registered nurses. That's immense operational capacity. And it naturally leads to the question, how does a company that big stay financially strong? Well, Trice Rating, the credit agency, they recently affirmed BDMS's rating at AA+ with a stable outlook. That's very high.
AA+ is serious.
It is. It reflects that strong market position, their solid operating performance. The only real caveat they mention is, the intense competition in the sector.
And their revenue surely backs that up. THB $102 billion in 2023. That's almost half, 48% of all the revenue from private hospitals listed on the Thai Stock Exchange. What did that kind of market leverage let them do? Things smaller players just can't manage.
Exactly. It gives them huge negotiating power, say, with suppliers, and it lets them make these massive strategic investments. If you look at who their patients are, about 70% of their healthcare revenue comes from Thai patients, 30% from international. Though for the first half of 2024, it shifted slightly, more like 71% Thai.
Okay, still mostly domestic then.
Mostly. But that 30% international is a really important growth engine. The average number of daily international outpatient visits hit almost 4,600 in the first half of 24. That's up 13% from before the pandemic.
13% higher than pre-COVID levels. Wow.
Yeah. They're seeing strong growth from what they call fly-in patients, people coming specifically for specialized treatments, especially to places like Bangkok, Phuket, Chiang Mai. And they're actively pushing into new markets too, like Saudi Arabia.
So they're not resting on their laurels despite the size. They're strategically investing to keep that lead, right? What does that look like?
Absolutely. Investment is key for them. They're constantly expanding the network, but also enhancing these 12 specific centers of excellence, COEs.
Centers of excellence, like for cancer or heart disease.
Exactly, specialized units. And these COEs are critical. They brought in about 60% of their medical service revenue and EBITDA in the first half of 2024.
60% from just 12 centers.
Shows the focus on high-value services. And look at their spending plans. They're projecting annual capital expenditures of THB 11 to 14 billion, that's Thai baht, from 2024 to 2026. Plus, they've got this massive THB 23.5 billion project, the BDMS Silver Wellness and Residence Project, slated for construction starting in 2026.
23 billion baht. That's not just adding a few beds.
No, it's a huge strategic bet on wellness and integrated care for the future. It signals a long-term commitment that, frankly, smaller competitors just can't match.
And they can afford it. What's the balance sheet look like?
Oh, yeah, incredibly strong. Their interest-bearing debt was only THB 8 billion as of June 2024. That gives them a debt-to-EBITDA ratio of just 0.5 times. Very low.
Super low leverage.
Exactly. And plenty of cash. THB 8.4 billion cash on hand, plus another THB 22 billion in undrawn bank loan facilities. They have a lot of financial firepower.
Okay, definitely a powerhouse. Let's shift gears a bit then. Let's look at Bumrungrad Hospital, BH. Not the same sprawling network as BDMS, but known as a leader in that sort of premium segment, right? And very focused on international patients.
That's right. A very different model.
Their 2023 revenue split really shows it. Almost 67%, 66.8% to be exact, from international patients. Compare that to BDMS's 30%. It's a stark contrast. How does that premium international focus play out in their financials, their profitability?
Well, it translates into some pretty impressive profitability metrics, actually. If you look at the last 12 months figures, BH significantly outperforms BDMS on margins.
Really? How much better?
Quite a bit. BH's operating margin was 35.2%. BDMS's was 19%. And return on invested capital, ROIC, BH hit 40.2% versus BDMS's 12.7%.
40% ROIC. That's huge.
It's very high. But here's the intriguing part. Despite those stellar margins, BH's stock hasn't done well recently.
Oh.
Yeah, over the past year, BDMS's stock actually did better well, less badly. BDMS saw a negative 24% return, while BH dropped a whopping 45%.
Minus 45%. Even with those margins, what's going on there?
It really highlights how the market can react to specific risks, even for a really profitable company. Sometimes that diversified scale of a giant like BDMS feels safer to investors.
Okay, so what are the specific headwinds hitting BH? Why the pressure?
There are some clear reasons. They're forecasting a 5% year-on-year fall in international patient revenue in the fourth quarter of 2024. And that's mainly down to a slowdown from Kuwaiti and UAE patients.
Well, the Middle East connection.
Exactly. It seems directly linked to the Kuwaiti government revising its list of approved hospitals in Thailand for its citizens seeking treatment abroad.
Ouch. So that directly impacts BH's bottom line.
It could. Estimates suggest it might translate to a THB 400 to 500 million profit decline per year for BH.
Okay, that's not insignificant.
No, it's not. And the market reacted sharply. BH's market cap plunged by THB 72 billion at one point, a 33% drop from its peak. But interestingly, many analysts think that drop was maybe too severe.
An overreaction, you mean?
Potentially. They argue the expected profit decline doesn't fully justify such a massive drop in valuation.
Right. And wasn't there also some worry about bills accounts receivable from Kuwaiti patients. Is that a big problem?
It was mentioned. The estimate is around THB 400 to 600 million outstanding, but generally that's considered manageable within the context of their overall finances. Not a, critical concern, more something to watch.
Got it. So what's the outlook for BH then? Are they just writing this out?
They have plans. They expect international patient revenue to actually grow, maybe 2% in 2025, but driven by patients outside the Middle East. And they're looking at new growth drivers like BDMS. They're expanding into new markets, Saudi Arabia again, and also China. They're developing a new hospital down in Phuket. And they have that high-margin VitalLife wellness business, too.
So diversifying their international base and leaning into wellness.
Exactly. And there's always the potential positive surprise, right? If the Kuwaiti government decides to resume patient referrals to Thailand in 2025, that would obviously be a significant boost for BH.
Okay, makes sense. So you've seen the giant BDMS and the premium player BH. Let's pull back a bit. What does all this mean for the wider Thai stock market? I saw recent reports from June 2025 suggesting the SO index, the main Thai index, is under quite a bit of pressure.
Yeah.
Closed near 1,114 and potentially heading down towards 1,050.
Yeah, the broader market sentiment hasn't been great lately.
What's driving that general apprehension?
It seems to be a mix of things. Concerns about, well, weak economic prospects domestically, some political uncertainty in Thailand, and also the ongoing instability over in the Middle East feeding through.
So those geopolitical ripples are definitely being felt.
Absolutely. It's clearly impacting investor sentiment across the board.
So in that kind of climate, what are analysts advising investors? Just sit tight.
Well, given the volatility, the general advice from many analysts seems to be, yeah, adopt a wait-and-see approach, maybe increase cash holdings a bit. They're sort of anticipating a potential recovery later, maybe in the second half of 2025. Valuations have come down significantly, that's true.
Like PE ratios dropping.
Exactly. Stocks that used to trade at price-to-earnings ratios of 25 or 30 are now maybe closer to 15. But even so, the immediate outlook feels pretty cautious.
And specific sectors feeling the heat. You mentioned the Middle East impact on hospitals.
Right. Analysts are definitely reporting that tourism and hospital groups, especially the ones heavily reliant on clients from Arab countries, are feeling that pressure specifically. But, and this is important, while earnings might slow down, nobody's really expecting the kind of catastrophic losses we saw during the peak of the pandemic.
Oh, okay. So it's pressure, not collapse.
Exactly. Particularly in tourism, some stocks have dropped back to COVID-era price levels, but the actual situation on the ground, travel happening, borders open, is obviously much, much better. The industry has shown it's pretty resilient.
Okay, so we've really covered a lot of ground here.
Yeah.
We've done a deep dive into Thailand's, frankly, ambitious healthcare industry. We look at how giants like BDMS use scale and strategic investment to dominate, while premium players like BH carve out high-margin niches, even if they face specific headwinds like the Kuwaiti situation. What really stands out, I think, is how these companies, kind of built on this strong national push for medical tourism, are constantly adapting to global shifts and domestic pressures. It shows real strategic thinking and resilience, too.
It really does. And this whole discussion, it sort of leads us to a bigger, more forward-looking question for you, the listener, to think about. Considering everything we've talked about, Thailand's established strengths in medical tourism, the proactive government backing, the smart strategic moves by these leading hospitals, how might future geopolitical shifts or changes in what patients around the world demand, how might all that redefine the whole idea of medical tourism and global healthcare in the years ahead? Something to ponder.